Good morning from our global headquarters in New York City. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. The first round of deals, President Trump touts talk progress, but says he's in no rush. China says the U.S. has reached out. The bull's out for tech. Meta and Microsoft jump as the giants defy slowdown concerns. Next up, Apple and Amazon. And a new relationship. As President Trump and Prime Minister Carney discuss their future, we'll speak to the president and CEO of the Canadian Chamber of Commerce. 7 consecutive days for gains of this equity market for the first time since Trump's election. We look very well on track to make that 8 days of gains. By the way, it's been the best 7 days since November of 2020. The rally continues in a big way this morning with strong earnings from Meta and Microsoft. The Nasdaq outperforms at more than 1.5%. Also optimism over Trump. Potential deals is the exact phrase he used on trade with various nations. S&P 500 futures up more than 1% this morning. When it comes to the bond market, we did see two-year gain yesterday. Yields lower. That continues again this morning. They're basically little change. Higher expectations for rate cuts after that GDP decrease. Moderate consumer spending, tame PCE figures. Your 10-year yield down by 1 basis point. We're trading just below 415 this morning. And the yen dropping versus the dollar. It's off some of the lows, but the BOJ leaving rates unchanged, pushing back on the timing for when it will reach its inflation target. Let's get a look at some stocks on the move in the pre-market this morning. With that is Bloomberg's Valerie Teitel. Good morning, Val.
Good morning, Danny. Let's start there in big tech. We're seeing some big news on the pre-market. Take a look at Microsoft, up over 8%, beats across the board, and also a bullish forecast when it came to their cloud business numbers. They also tapped the brakes on CapEx for the first time in 10 quarters. It seems like investors are liking that prudence. That stock is up over 8% in the pre-market. Let's move on to Meta. Another beat there for the social media giant. The worry about ad revenue pullback is not happening. It did not show any signs that advertisers are pulling back on ad spending. Meta up some 6% in pre-market. Finally, let's add Qualcomm on here. This is a stock that gave a tepid forecast yesterday. Qualcomm is the biggest chip maker when it comes to smartphones. They showed some concern on the smartphone industry as it's adjusting to tariffs. So Qualcomm on the downside, down 5.5% pre-market.
Valerie Teitel with a look at the tech movers this morning. We'll catch up with Valerie later this hour. Also coming up this hour, we're going to be speaking to Stephen Major of HSBC and Candace Laing of the Canadian Chamber of Commerce. Now, Stephen Major, global head of fixed income research at HSBC, discussing the future of the bond market globally, writing, loyalty to the U.S. Treasury market was built through years of trust in the reserve currency and perceived safe haven status for bonds, underpinned by an independent central bank. If this status were to be put at risk, the UK could stand to benefit as an alternative safe haven. Pleased to say that Stephen joins us now. Steve, great to see you. And I know you wrote this in your research as part of why the UK yields have a higher premium compared to their European counterparts. But that first part, is that a serious discussion ongoing right now? A serious look for alternative havens beyond the Treasury market?
Yeah, well, the stock response is there's no alternative, Danny. But then if you take a bit of a look, you could maybe buy a basket of alternative bonds. And the context is quite important here, Danny, because the reflexive response to the idea that the UK yields are high sometimes goes back to Brexit, because there was a Brexit premium. But that's 9 years ago. That's been fading somewhat. It was about supply constraints. But if you think a few years forward, we could be transferring some of that risk over to the US, because if the labour market's not going to be growing like it was the last 4 or 5 years, some 15 million people came into the US, for example. So you had a supply boost in the US through a period when the UK was recovering from supply constraints. The other thing is the UK has had a few fiscal episodes in recent years, going back to 2022, and you could even say last year. Those fiscal episodes are reminders to the UK government to behave, and therefore you have fiscal responsibility as well, and you have an independent central bank. So I think that given some of the things that have been discussed in the last few weeks, people will be thinking, well, perhaps there are some alternatives. Now, the problem for the UK is it's so small as a market, but it's a good start anyway, Danny.
It kind of gets to this narrative also of, do foreign buyers of treasuries look more closely at their own domestic markets? Stephen, I know you've been pushing out to some degree about this idea that there's a foreign buyer strike of U.S. treasuries. Yeah. What does that narrative get wrong? What does it actually look like in terms of foreign flow into American treasuries?
Yeah, well, both the US and UK have a similar pattern in the rotation into domestic investing over the last 10 years. So again, the context is important, right? Something like 30% of the stock of US treasuries are held outside the US. So if there's some $8 trillion or so, half of it's in the official sector, half of it's in the private sector. Now, I dare say there will be some private sector investors that don't like what's happening and may have sold. But if I have to order the reasons for the sell-off at the beginning of April, it was more the vol shock that came from the tariffs and the reciprocal tariffs and what that did to asset swap positions, basis trades, etc. And also the forced deleverage that was happening and liquidations in real money. That was the explanation for the jump in US yields. To point at overseas investors, I don't think that's correct, Danny.
If that is the case, does that mean some of the froth, some of the jumpy money has been taken out of the Treasury market and there's less concerns of fragility? Or are you still concerned that we could get episodes like we did in mid-April?
Look, I think 10-year Treasuries should sit in a 3 to 4% range. They're currently above 4. Prior to April the 2nd, they were heading below 4%. So I don't think it's unreasonable, given the fact that the Fed wants to get back onto an easing path later this year, that treasuries are in a 3-4 range, and 3.5 is our forecast for this year. I think you're right. Some of the froth may have been taken out, and we've had a very calm couple of weeks, as you were just pointing out. Treasury yields are grinding lower. And they are restoring some of that trust that I think is being challenged. I mean, the important thing here is that trust is an antecedent of loyalty, and you need loyalty in your bond market. So that's why it's important that governments keep that trust in their bond markets.
But we even heard from Scott Bessent earlier in the week talking about the unpredictability being a feature of Trump's negotiating tactic. You even had Stephen Mirren, according to the FT, talking to various bond market investors who said that they left more confused than when they entered that meeting. Steve, there still seems to be an element that we won't get exact clarity from the Trump administration. So is that trust really restored for the bond market?
I think people are starting to get their heads around the scenario approach. I mean, the Bank of Canada actually introduced a twin scenario forecast. So they had a severely adverse outcome from tariffs, full-on tariffs, and something a bit more like muddling through with some adjustments through time. But the important thing is they ended up with the same longer-run equilibrium rate. If you apply the same methodology to the US and other bond markets, it says to me that people are getting their heads around this. The idea that there is a severely adverse scenario that means that yields could fall a lot, and there's one whereby the yields fall anyway, but at a slower pace. For yields to go up, you've really got to de-anchor the market. So you need to lose that equilibrium. That's where the Fed independence and the reserve currency status is absolutely critical. And I don't think it would be right if the US authorities flirt with those two.
At least for now, Trump has definitely pulled back on that rhetoric despite his criticisms of Powell. See, we also got the refunding announcement from the Treasury yesterday. He had the same plan that, of course, that he had criticized under Janet Yellen, but there had been some expectation to be more aggressive in terms of buybacks, again, to help soothe bond markets. We didn't necessarily get that, Steve. Should we have?
Yeah, to be fair, the Treasury Secretary may have said certain things before he got into the seat, but the reality is there's a lot of debt. It has to be rolled over. They have to manage the maturity of this stock of debt, and so there's always the option of moving shorter if there was some stress, for example. Now, the buybacks were introduced under the Yellen Treasury, but they were more about illiquids, and it wasn't a full program that I think that the Treasury might be working on. I don't know anything for sure, but imagine that they have a program that's there. It would mean that the Treasury could be the buyer of last resort rather than the Fed, which is interesting because, you know, by definition, each future crisis we have will be different to the previous one, but people will try and model it on what they've seen in the past. But of course, the context is always very different. So the fact that you've got the Treasury and the Fed as potential buyers or interveners of last resort, I think that's quite soothing for the Treasury market.
And Steve, that is just a perfect thing to say in so many respects of what we're going through right now. It is always so wonderful to have you on. Thank you for joining us.
Thanks,
Stephen
Danny.
Major of HSBC. Let's get you some other top stories now that are trending on the terminal this morning. The Bank of Japan slashed its growth outlook and delayed the timing of getting back to its 2% inflation target. The central bank kept its rates unchanged at 0.5%. The yen continues to weaken against the dollar while JGB yields are lower this morning.
There
is more uncertainty than usual about whether the BOJ's forecast will materialize. It is necessary to closely monitor developments on the tariffs front, as we will see a significant rise in adverse effects on our economic and price outlook.
The European Union is planning to present a paper on new trade proposals to U.S. negotiators next week. According to Bloomberg sources, the paper will set out a package for lowering trade and non-tariff barriers, boosting European investments in the U.S., cooperating on global challenges like tackling China's steel overcapacity and purchasing more U.S. goods. Elsewhere, Airbus says it won't cover the cost of tariffs on its planes imported by U.S. airlines. That sets up a clash with some of its biggest customers who've been unwilling to shoulder the duties imposed by President Trump. It's just the latest indication of how the aviation industry is scrambling to adjust to new fees in the already complex aerospace supply chain. Coming up, President Trump sees no rush to strike trade deals despite the public perception of his tariff regimes. We'll have more on where we stand coming up next on your Bloomberg Brief.
We're ripped off by everybody, but really by China. They were the king of ripping off the United States. Now they're not doing any business here because I don't want them to do business. So I set a high tariff. I don't want them to do business. Now, will we make a deal? There's a very good chance we're going to make a deal, but we're going to make it on our terms.
Mr.
And
President,
it's got to be fair.
President Trump speaking in a telephone interview with former Fox host Bill O'Reilly yesterday. They covered tariffs, Ukraine, and Trump's first 100 days back in the White House. Joining us now is Roz Matheson, Bloomberg EMEA News Director. So, Roz, we have positive sounds coming from the Trump administration saying that there are potential deals, saying that he's optimistic something can be struck with China. You have the EU presenting a paper on possible trade negotiations. But Trump also saying in that interview that he is in no rush. So where do we actually stand?
Well, as you say, there's a lot of noise and there's a lot of talking. So the US is saying they're talking to a whole lot of countries and hoping to get some sort of initial trade deal soon. And those are probably framework understandings versus a full, box and dice trade deal. Does that come first with a country in Asia, India, Japan, or whoever? The EU obviously laying out a position here for possible negotiations, and the big one being China in all of this. But so far, we don't have a single trade deal out of the administration. We've got a pathway potentially to some, but even as Donald Trump says he's in no rush, other countries say the same. They say, yes, we want to talk to the US. Yes, we want to have these conversations and negotiations, but we're not going to rush to make a bad deal just to get a deal done. And that's a very clear message you're seeing also from some other countries around the world, because these trade deals are very complicated. They're very granular. You don't want to race to sign something that you later regret. So there's a lot of conversation, yet to be much that's tangible. And really the big question in all of this, at what point are the US and China at a high level going to talk formally, properly about trade, and what is the pathway there to a potential understanding?
Right, and China very specifically saying China doesn't need to talk to the U.S. until it takes meaningful measures. So it seems like they're waiting for the U.S. to make the first move. Roz, while we have you, we did have one deal yesterday away from trade, but on Ukraine and their resources with the U.S. What sort of deal was reached?
Well, that's right. This resource deal that's been in train for some months and been very fraught, and negotiations have been very complicated. And there have been some changes to this deal to get it over the line. But basically, it is this joint investment reconstruction fund that we based around these future licenses around minerals, gas, oil, a lot of which is unproven, a lot of which we're not quite sure how much of it there is, where it is, how extractable it is. But this fund would pile that in together. The US would get preferential access to the profits from that fund, and that's ostensibly to repay the US for any future military aid that they give Ukraine. But it does give the US quite a lot of leverage over Ukraine economically. The US would argue that binds the countries together economically, and that's a form of security guarantee in a way for Ukraine against Russia, but it's not a military guarantee. And this deal is something that Donald Trump can certainly tout, but it doesn't mean we're necessarily much closer to a formal ceasefire between Russia and Ukraine. You can see the language from Russia particularly hardening of late and saying there's a lot to be discussed, a lot to be navigated in order to get to that proper ceasefire arrangement. So perhaps a bit of security from Ukraine out of this, but a long way to go.
Roz, really appreciate your time this morning. That is Bloomberg's Roz Matheson. Now let's turn to earnings. Today is the busiest day for the quarter for S&P 500 results. Apple and Amazon are on deck, but we've already heard from two other tech giants yesterday, Meta and Microsoft, posting strong numbers, shares at least up 6% to the pre-market. Meta CEO Mark Zuckerberg told investors that he's optimistic despite the tariff-induced uncertainty.
We've had a strong start to the year. Our community keeps growing with more than 3.4 billion people now using at least one of our apps each day. Our business is also performing very well, and I think we're well positioned to navigate the macroeconomic uncertainty.
Joining us now is Bloomberg's Charlie Wells. Charlie, a strong set of results.
A very strong set of results, and a lot of this has to do with tariff relief on some fronts for these software companies, but also a constructive story that they've both been able to tell about AI. So on that earnings call, it was really striking to hear Mark Zuckerberg talk about a lot of the opportunities that AI could present a lot of their customers to sort of personalize and make a lot of the ads more targeted that they present. Ad revenue is so important for Meta. It brings in 98% of their revenue. It was a little bit similar with Microsoft, where very different business units, but you saw significant growth in their Azure cloud business, 33% growth. They were able to indicate that 16 percentage points of that growth came from AI. So for both of these firms, there's that tariff relief, but also this narrative of AI actually being able to help them make money.
And also the capital expenditures that they all recommitted to. I think for Alphabet, it was $75 billion last week. Meta, $72 billion increase. And I wonder, Charlie, where does that set the bar for Apple and Amazon when they report earnings?
It sets it really high, Danny. I think, we're thinking about these two companies reporting yesterday. Then last week we had Alphabet setting that high bar. And it could be a little bit more difficult for both of these companies, for Apple and Amazon, because they're not just software companies. They rely on retail on the Amazon front, and there's hardware on the Apple front. And again, there's that China risk that both of them will have to deal with. You've got production in Apple of iPhones. Apple trying to pivot out of China for a lot of these iPhone productions into India. Amazon concerned about a lot of these retailers. And it's not just retail for Amazon as well. Investors will be focusing on some of the services that a lot of these Chinese retailers use. They rely on Amazon logistics, on Amazon advertising. So look, there may be a positive tech story in the markets today, but it could shift a lot in just a few hours.
I was going to say, Charlie, how much is that Amazon call just going to be like? Have you been talking to the Trump administration? Are they angry at you? Did you pull back on tariffs because of what we heard from Trump's press secretary at the conference?
That's exactly right, Danny. There was talk this week about the pricing strategy, about maybe indicating, what fees were coming from those tariff hikes, and that seems to have, angered the Trump administration. But Amazon is in a unique position, right? Because they've got that heft. They've got that heft with the Trump administration, but also with China. So trying to make the situation, I think, the best they can. And if any company is going to be able to muscle in this difficult moment for a lot of retailers, it's probably going to be Amazon.
Yeah, Trump saying that he spoke with Jeff Jeff Bezos specifically after that moment. Charlie, thank you so much for joining us this morning. That is Bloomberg's Charlie Wells. Okay, coming up, we're going to take a look at what else is making headlines around the world, including a denial from Tesla that they're looking for a new CEO. We'll break down the story next in your Bloomberg Brief. This is Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at what is on the front pages this morning. Starting up, the New York Times leading with the U.S. and Ukraine reaching a deal for minerals, granting the U.S. privileged access to new investment projects to develop Ukraine's natural resources, including aluminum and graphite. It is unclear what the deal means for future U.S. military support for Ukraine. Next up, a Wall Street Journal report that the Tesla board about a month ago opened up a search to succeed Elon Musk as CEO, reaching out to several executive firms to work with him, saying that they got serious with his White House focus. The chair of Tesla, though, writing this on X, that this is absolutely false, and the CEO of Tesla is Elon Musk, and the board is highly confident in his ability to continue executing on the exciting growth plan ahead. Next up on the FT, reporting that China is signaling trade talks with the U.S. They're leading with that. The Chinese state media said that there would be no harm in discussions with the Trump administration. Citing unnamed sources, it noted that U.S. officials had proactively reached out to China through various channels. Coming up, beats all around. Big tech comes through with big results. We're going to look at those first quarter numbers from Meta and Microsoft next. Shares up 6% for Meta. For Microsoft, it's an 8% advanced. That's coming up next. This is Bloomberg. From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. The first round of deals, President Trump touts talk progress, but says he's in no rush. China says the U.S. has reached out. The bulls come out for tech. Meta and Microsoft jump as the giants defy slowdown concerns. Next up, Apple and Amazon. And a new relationship as President Trump and Prime Minister Carney discuss their future. We speak to the president and CEO of the Canadian Chamber of Commerce. It's been 7 consecutive days of gains for this equity market, the longest winning streak since Trump's election. We look to make it 8 days this morning, led higher by tech. NASDAQ up 1.7% for this future session after Meta and Microsoft earnings. Also getting a boost from hopes, as Trump put it, of potential deals, the first round of trade deals to come for this market. Will we get it? For the bond market, you've also mostly, for the most part, been looking for eight consecutive days of gains, including today. We move lower by nearly 2 basis points for your 10-year yield. We're at 4.14 for that. More cuts continue to get priced into this market in the front end after yesterday's economic data. 3.6% is where we stand. And the yen dropping versus the dollar. The BOJ leaving rates unchanged, pushing back on the timing for when it'll reach its inflation target. Let's look at some stocks to watch this morning. With that is Bloomberg's Valerie Teitel. Hey, Val.
Good morning, Danny. Let's check there with a check on the big tech names. Microsoft and Meta both powering higher in the pre-market after these earnings beats after the bell yesterday. Meta up 6.25%. Microsoft up 8%. This streak of equity market rally is set to continue with these strong gains in big tech. But let's keep an eye on the stocks that we have reporting this morning. One of them is a big one, Danny. It's in the healthcare space. Eli Lilly. It's been one of the key outperformers in the healthcare sector of late, mostly around their success in their oral GLP-1 pill. But we'll be watching the CEO's comments around these Trump promised tariffs on the sectoral, on the pharmaceutical sectoral tariffs specifically. That stock is powering higher in the pre-market, though, up more than 2%. The earnings frenzy does continue. We do have a lot more stocks reporting before the bell. The big ones this morning will be MasterCard, McDonald's, and also from the healthcare industry, CVS.
Valerie, great work. Thanks so much for joining us this morning. Bloomberg's Valerie Teitel. Let's dive deeper into those earnings from Meta and Microsoft. Meta CEO Mark Zuckerberg told investors that he's optimistic despite the tariff-induced uncertainty.
We've had a strong start to the year. Our community keeps growing with more than 3.4 billion people now using at least one of our apps each day. Our business is also performing very well. And I think we're well positioned to navigate the macroeconomic uncertainty.
Joining us now is Mandeep Singh of Bloomberg Intelligence. Mandeep, are you as optimistic as Zuckerberg seemed to be on Meta after those results?
I mean, when I look at the guide they gave for 2Q, clearly it tells me that, the impact from Chinese advertisers, which was the big risk with their earnings, that didn't really pan out. And, they are somewhat insulated when it comes to bringing in other advertisers to make up for any lost revenue. And look, overall, their Llama story, the AI story, really is around a personalized assistant. That's why they're raising their CapEx. I mean, to me, this is a little further out. So clearly they have a plan in terms of how they want to compete with the other LLM players. 4 other players are ahead of them. They are a distant fifth when it comes to these LLMs. But their focus is we have all the data around the 3.5 billion users we have, and we'll offer them a personalized assistant and then focus on voice. So it sounds like an interesting strategy, but clearly that's why they're raising their CapEx.
And on that CapEx, we heard from Alphabet last week that they're going to spend something like $75 billion this year. For Meta, it's a sizable raise, too, from $39.2 billion spent in 2024 to $72 billion this year. Mandeep, what do you make of those numbers?
Absolutely. I mean, look, they have the highest growth in terms of CapEx among all the hyperscalers. And you have to ask yourself, with Microsoft, their Azure revenue growth accelerated. With Google Cloud, they have a $50 billion revenue run rate business. In the case of Meta, all the AI investment is showing up in their core business. Clearly, 16% growth with 52% margins was aided by AI. But the standalone Meta app, I mean, I think it's a distant 5 right now. You already have the leaders in ChatGPT, Google Gemini, Claude, Grok. Meta AI is a new app, and it's not even as good as the other 4. So will they be able to monetize it? I don't know. But clearly the AI monetization is showing up in their ad pricing and the ad stack that they currently have with their family of apps.
So, Mandeep, just fair to say some of those reports we've seen of ex-company, ex-big tech company pulling back on data center spending, that was a bit overdone?
Absolutely. I think AI is still the secular trend. And, these companies are quite prudent when it comes to rationalizing their investments. They did that back in 2023 when the ZERP era ended and, inflation and interest rates were rising. So the fact that nobody is doing that among the hyperscalers goes to show that they feel this is still, a temporary phenomenon with the tariff situation, but they don't see a prolonged downturn here. And that's why they continue to invest big when it comes to CapEx.
So strong results, Microsoft, Meta, Alphabet. Up next, we have Apple and Amazon, completely different businesses when it comes to the tariff impact. Mandeep, what are you expecting?
Well, I think we had the good prints last night. Tonight isn't going to be as rosy. And my guess is, Apple clearly is the most exposed when it comes to the hit from China in terms of revenue and the supply chain. But they have shown in the past they just know how to maneuver these kind of situations well. And with Amazon, we know what transpired this week. So clearly there is that retail line they will get impacted by when it comes to tariffs. But the AWS side should do well, given what we heard from Microsoft last night, because they said the non-AI portion is also rebounding. So that should actually play into AWS's strength because they are the largest cloud provider when it comes to the traditional cloud.
But does what we heard yesterday coming out of the Trump administration, does it hamstring companies like Apple and Amazon, their ability to rise prices when they are faced with tariffs, Mandeep? Is this going to be a story of impact to margins?
I think more so for Amazon retail business. I think less for Apple because the last time tariffs happened, Apple did manage to get an exception. So that's why I think they will maneuver this around when it comes to their hardware sales. But for a company like Amazon, there is no doubt they will get hit with the tariff situation and the uncertainty given the size of their retail business.
Mandeep, thank you so much for getting up early and joining us this morning. Always fantastic to have your insights. Mandeep Singh of Bloomberg Intelligence. Let's get you some other stories now that are trending on the terminal this morning. The Bank of Japan slashed its growth outlook and delayed the timing of getting to its 2% inflation target. The central bank kept its rate unchanged at 0.5%. The yen continues to weaken against the dollar this morning. JGB yields are lower.
There is more uncertainty than usual about whether the BOJ's forecast will materialize. It is necessary to closely monitor developments on the tariffs front, as we will see a significant rise in adverse effects on our economic and price outlook.
The EU is planning to present a paper on new trade proposals to U.S. negotiators next week. Bloomberg sources say that the paper will set out a package for lowering trade and non-tariff barriers, boost European investments in the U.S., cooperate on global challenges like tackling China's steel overcapacity, and purchase more U.S. goods. Elsewhere, Airbus says it won't cover the cost of tariffs on its planes imported by U.S. airlines. It sets up a clash with some of its biggest customers, unwilling to shoulder the duties imposed by President Trump. It's just the latest indication of how the aviation industry is scrambling to adjust to new fees in the already complex aerospace supply chain. Coming up, we speak with the president and CEO of the Canadian Chamber of Commerce on the future of the relationship between the U.S. and Canada. That's coming up next. Stick around for your Bloomberg Brief.
We're ripped off by everybody, but really by China. They were the king of ripping off the United States. Now they're not doing any business here because I don't want them to do business. So I set a high tariff. I don't want them to do business. Now, will we make a deal? There's a very good chance we're going to make a deal, but we're going to make it on our terms.
Mr. President,
it's got to be fair.
President Trump speaking to Bill O'Reilly last night about the chances of a trade deal with China. Speaking on the phone, Trump said that there was no rush to get a deal. Joining us now is Kevin Whitelaw, Bloomberg managing editor for Weekends for the Americas. Kevin, on one side of things, you have Trump saying that potential deals are on the way, but on the other side of things, saying that there is no rush. So where do we stand?
I think we're all trying to sort that out. I mean, the biggest problem is it's not even clear there's any real conversations going on between the U.S. and China right now. On the European side, they've been trying to figure out who to talk to and who actually can make a deal. They really haven't been able to engage yet with Trump himself. And ultimately, all these decisions are going to come down to Trump. And, you know, for a lot of countries, they're willing to make some small offers. They're willing to have conversations around the edges. But, you know, the question is going to ultimately be, what is Trump actually looking for? Because he's talked about wanting tariffs for a couple of different reasons. And one of them is about revenues and you know, eliminating or reducing the income tax. Well, that means those tariffs have to stay in place if that's what he's actually looking to do. And so it's really a little bit unclear what the end game is here. It's very clear, however, that the market pain and the economic impact is starting to trouble the White House.
But at least the good sort of vibes, I guess, not actual deals, but talk coming out of the administration is helping this market. Let's just take China, Kevin, because we heard from China that the U.S. is proactively reaching out to China. Trump, we heard there saying that he hopes for a good deal, but China itself saying that they don't need to talk to the U.S. until it takes meaningful measures. Where is the ball? Whose court is it in at the moment, Kevin?
I mean, I guess the ball's going to be in whichever country feels pain faster and has to respond to it. And, you know, ultimately, that actually could be the United States. I mean, we're already looking, I think, at some supply shocks developing in the economy with suddenly cargo shipping way down. You know, going to see prices on items go up or things simply become unavailable. That'll start to kick in the coming months. And at some point, that's going to start, I think, worrying consumers. It's going to start worrying businesses. The uncertainty already is kind of paralyzing investment decisions and other things about where exactly they're going to go. How does a company make a long-term investment decision if they don't really know what the situation is going to be next week or next month? And so I think that it's ultimately going to probably fall on the Trump administration to find some way to walk this back, unless they decide this is the fight they want to have. But I think China might actually feel it has a bit of the upper hand and can simply wait it out in a way that it's possible the White House won't be able to do.
Kevin, thank you so much for joining us, and congratulations on the new job. Very well deserved. Bloomberg's Kevin Whitelaw there. Now, as Mark Carney takes office in Canada, he also takes on the challenge of President Trump, who spoke about his relationship with the Prime Minister at a cabinet meeting yesterday.
I think we're going to have a great relationship. He called me up yesterday. He said, let's make a deal.
It's going to be a very different one than we've had in the past. We'll have a partnership on our terms. There's a win-win possibility there, but on our terms, not on their terms. We deserve respect. We expect respect. And I'm sure we'll get it in due course again. And then we can have these discussions.
So as you heard there, Mark Carney speaking about his relationship in maybe a slightly different tone with the U.S., speaking to the BBC yesterday. I'm pleased to say that joining us now is Candace Laing, President and CEO of the Canadian Chamber of Commerce. Candace, thank you so much for joining us this morning. It's wonderful to see you. I'd love to first just get your take on this huge turnaround and ultimate victory for the Liberal Party of Mark Carney's Liberal Party. What message do you think that the Canadian people have sent?
Well, thanks for having me first off. And I think, as we know, Canadians saw this election as one of great consequence. And really, we ended up with the election timing in a very different economic moment than the country was in just a few months ago. So that meant the ballot box questions, shifted with the onset of tariffs and really with the break in what Canadians have known for a long time in that stable relationship between the Canadian people and Americans. So I think at the core, when people headed to the polls, there was this anxiousness looking for economic relief, both at the individual level for cost of living challenges, but now those challenges put in a broader context and external threat. So voters were looking not only for the policy that would support and bolster the Canadian economy, but also for the person they knew they wanted to send into negotiations with the Trump administration.
And of course, who is there in Ottawa makes such a big difference for your tens of thousands of members at the Canadian Chamber of Commerce, Candace. We heard there from President Trump saying that he's ready to make a deal with Canada. Mark Carney, both through his campaign and since securing, again, the prime ministership, has taken more of a hard line. Is that the tone that you think makes the most sense out of the prime minister?
Well, I think what matters most, and I heard President Trump say this himself, is the conversations between the two of them versus the comments made, by either of them, during a campaign or to their constituents. And so I think we're happy to see that, relations and discussions so far have had a positive tone. And I think we're just relieved, the Canadian business, community, that we have a government now that's going to be back at work. We had prorogation, January, March, and then headed into an election. So we've really had our parliament, closed for business. And now we're just relieved that we can turn into real discussions, real negotiations about our critical trade relationship with the United States.
Well, Mark Carney, in his victory speech, said that the economic relationship with the U.S. is over in the shape and form that it had been. Is he correct?
I would agree, but it's a broader aperture I would take on that comment is that, we are in a shift, a rebalancing of a lot of aspects globally. And so I think, the best way, forward is through to a new version that actually addresses some of the challenges, the irritants, the things we know that need to be, serving global trade in a better fashion. And this is, Danny, where we head into not only Canada having discussions with the United States, but leading discussions for the upcoming G7 summit. And ahead of that, just in a few weeks, the B7 summit, where business leaders from all those same countries gather to talk about what's the best path forward for global trade. How do we address some of the irritants and struggles and, work with like-minded countries on some of those irritants and address non-market practices that we need to tackle together.
Well, China has certainly been pitching itself as a place that global companies, that global governments can turn to in the absence of the U.S. I know the Chinese ambassador to Canada made similar comments to that degree not that long ago. Do you think it would make sense to see stronger ties between Canada and China at this moment?
Well, with ties right now, it's very interesting because as Canada deals with many tariffs, we have the original border fentanyl tariffs and we have sectoral tariffs, from the United States as well. But there is an important third bucket of tariffs. I call them the boomerang tariffs, which are from China on Canada right now. And that's 100% tariffs on canola and peas and pulses and 25% tariffs on pork and other goods. And that's in retaliation for Canada's alignment with the U.S. on EV tariffs and steel tariffs from last year. So I think right now Canada is receiving a very clear message from China. If you align, you're in trouble if you align with the U.S. So it's a very interesting moment. And I think as we head into the G7 and B7 discussions, this is where we really need the U.S. administration to come help lead those discussions and that plan going forward on, how do we maintain multilateral collaboration to address some of the concerns in the trade with China.
Certainly feels like Canada's between a rock and a hard place. But Candace, if we just look at American tariffs, U.S. tariffs on Canada so far, 25% on autos, aluminum, and steel, a similar one on Canadian exports that don't fall within the U.S. MCA. You represent many businesses in Canada. What has been the impact on them so far?
Well, the impact, even before the tariffs came into effect, just the threat of tariffs puts a chill across all business because of the uncertainty. How do you take decisions on anything when you don't know the impacts? You can't forecast. You can't issue your guidance with a level of confidence. And now I would say that shift has gone, from a chill to a complete freeze for a lot of businesses. They're trying to hold off on layoffs if they can, but they're definitely holding off on decisions, on investment and capital flows. So the impacts are great, but some of them are not as well seen as others. And so even though there's reprieve, with an extended indefinite deadline on the original tariffs of 25%, anything that would be CUSMA or USMCA compliant, we're finding businesses are scrambling because many hadn't done the paperwork to make sure they were CUSMA or USMCA compliant. It's quite a process from goods coming out of Canada, dealing with the rules of origin, and then those receiving those goods in the United States, making sure that all the paperwork is done to ensure compliance with our trade agreements. So there's all these knock-on effects from the tariffs, in addition to the obvious direct impact costs, whether they're being absorbed by businesses or passed on to consumers.
Well, Candace, I'm sure it has not been a quiet time for you so far this year. We really appreciate you spending the time with us this morning. Candace Laing of the Canadian Chamber of Commerce. All right, as we head to the commercial break, a quick check on markets boosted by what it hopes will be trade deals, Canada being one of them, potentially India, maybe Japan, South Korea, just some of the names floated by the Trump administration. We're higher by 1 1/3%. This is Bloomberg. Let's get you set up for your trading day on this Thursday. We're going to get more earnings. CVS, Eli Lilly, McDonald's, MasterCard all have results before the opening bell. We'll get initial jobless claims at 8:30 a.m., along with ISM Manufacturing at 10 a.m., and Apple and Amazon will then report after the market close, which, by the way, Apple falling in the pre-market session this morning, down more than 1%. That contrasts with Meta and Microsoft and their strong earnings and commitment to CapEx above $70 billion for this year when it comes to Meta. Those shares up 6.5% and 8%. This was your Bloomberg Brief. Surveillance will take things from here.